Hi, I'm Calvin King from Westminster Schools in Atlanta. Today I'm recommending a buy on Coinbase at $167 per share with a price target of $339, representing roughly 103% upside. Coinbase is the largest publicly traded crypto exchange in the United States, and I believe the market is undervaluing Coinbase for the digital asset ecosystem. And as crypto adoption expands and U.S. regulation becomes clearer, Coinbase's earnings power and valuation multiple have meaningful room to expand. And to understand that opportunity, first we need to look at the broader industry. So the crypto global market cap is around 2.2 trillion today, with projections approaching around 10 trillion by 2030. Crypto has evolved beyond speculation, and it now includes payments, decentralized finance, tokenization of assets, and institutional custody, and also ETFs. And recent ETF approvals and improving regulatory clarity in the U.S. signal that crypto is moving closer to mainstream finance. Institutional participation is also accelerating, like asset managers, corporations, and even governments are engaging. And as regulation tightens, compliant and transparent platforms are positioned to gain share, and that benefits Coinbase. Now let's take a look at why Coinbase stands out within its environment. Okay, so my thesis rests on 5 core drivers. So first, adoption growth. As retail and institutional allocation increases, trading volume also increases, directly benefiting Coinbase's transaction revenue. And the second is regulatory clarity creates advantage. And Coinbase is U.S. regulated and publicly traded, which builds trust and raises barriers for competitors. And third is revenue diversification. So the company has expanded into custody, staking, subscriptions, and ETF services, creating more recurring and stable revenue streams. And the fourth is Base, their layer 2 blockchain, and it positions Coinbase as infrastructure, not just an exchange, expanding long-term monetization opportunities. And fifth is crypto remains cyclical, but each cycle historically expands adoption and strengthens infrastructure. And Coinbase has shown it can scale efficiently during these up cycles. And the market still values Coinbase mainly as a volatile trading proxy, but I see it evolving into foundational digital financial infrastructure. So Coinbase operates a retail trading platform and provides institutional custody services for large investors. And beyond trading, revenue now includes staking and subscription services. And the launch of Base extends our ecosystem into blockchain infrastructure, supporting developers and decentralized applications. And the management strategy is pretty clear. They want to diversify revenue, scale institutional adoption, and maintain regulatory leadership to build long-term credibility. Now onto AI's impact on Coinbase. So AI strengthens fraud detection, cybersecurity, and compliance automation, and operational efficiency, which are all critical to crypto and Coinbase. And rising cybersecurity investment supports this need. However, AI also increases fraud sophistication, and it may attract more regulatory scrutiny. But strong oversight and execution are essential for the impact of AI to be positive on Coinbase. Okay, so now on to Coinbase's competitive position. So the crypto exchange space is pretty crowded with competitors like Binance, Kraken, Gemini, OKX, and Crypto.com, but Coinbase has built a premium US brand with a real moat. And here's why. So first, for trust and regulation, Coinbase is fully US regulated and publicly traded. That gives users, especially new or institutional investors, confidence that their funds are secure and compliant, something many offshore exchanges cannot guarantee. Next is brand and popularity. Coinbase has become almost like an Apple-like brand in crypto. Even people who don't know or trade crypto know the name Coinbase, and that awareness drives new users to the platform and builds loyalty. Next is the network effects and the ecosystem. So with Base, Coinbase is building a blockchain ecosystem. As more developers and applications and users adopt Base, the platform becomes even larger, leaving Coinbase better positioned to capture long-term revenue from trading fees. And also there are high switching costs. So moving crypto between platforms is slow, complicated, and sometimes risky. And once users are on Coinbase, they tend to stay, reinforcing retention. And now for Porter's five forces. So for competitive rivalry, it's high because exchanges compete on fees, but Coinbase offsets this with trust, compliance, and institutional partnerships. And for the threat of new entrants, it's low to moderate because starting a compliant U.S. exchange requires heavy capital, regulatory approvals, cybersecurity, and also brand credibility. Next is bargaining power with buyers. It's moderate because users can switch, but switching is costly in time, security, and familiarity. And then next is bargaining power of suppliers. So it's low because liquidity providers and token issuers are fragmented, and Coinbase isn't dependent on any single one. And the threat of substitutes is moderate because decentralized exchanges exist, but they're more complex for mainstream users and they're also less trusted. So the bottom line is Coinbase's combination of regulatory compliance, brand recognition, ecosystem, network effects, and high switching costs creates a durable moat that competitors can't just easily replicate. So now for financial analysis and growth points. So 2024 marked a clear inflection point. So revenue grew 111% year over year, while subscription and services revenue increased by 64%, reflecting more diversification. And net income also expanded from $95 million in 2023 to $2.6 billion in 2024, driven by higher volumes and cost discipline. And also assets on the platform grew 95%, supported by price appreciation and institutional inflows. Free cash flow also turned strongly positive, margins improved, and operating leverage became evident. Coinbase is clearly transitioning into a scalable and more profitable platform. Okay, so now for valuation. So relative to traditional exchange operators like S&P Global, CME Group, and Intercontinental Exchange, Coinbase trades at a lower EV to sales ratio and a lower price to earnings multiple, despite operating in a higher growth market. And for my DCF, I calculated a 10.26% WACC, or weighted average cost of capital, and a 4% terminal growth rate. And I used 4% instead of 3% because I think Coinbase will grow fast. I think Coinbase will grow faster than the economy, as it has a beta pretty well over 1. And I ultimately got an intrinsic value near $376 per share. But then I applied a conservative margin of safety because all these numbers are just estimates, and that still resulted in a $339 price target, which is still representing a 100% upside from the current price. Okay, now for risks and mitigation. So key risks include crypto volatility, regulatory shifts, fee compression, revenue concentration, and cybersecurity threats. But mitigation strategies include continued revenue diversification, international expansion, strong compliance positioning, and sustained investment in platform security. And also note that higher fees may hurt competitiveness and that it is a risk, but Coinbase's reputation for safety and ease of use attracts more users, mitigating the risk. All right, now for ESG considerations. So Coinbase does not mine crypto, so it avoids direct exposure to Bitcoin's energy consumption and wasting a whole bunch of energy. And as an exchange, its environmental footprint is significantly lower than mining operations of other crypto platforms. And socially, Coinbase expands financial access while prioritizing security and compliance. And from a governance perspective, it operates as a regulated U.S. public company with transparent reporting and a strong balance sheet. And while crypto faces ESG scrutiny broadly as a whole, Coinbase's structure limits direct environmental risk, and it aims to continue to reduce its negative effects on the environment. Coinbase has built a regulatory moat within a structurally expanding industry, and revenue diversification and profitability are also improving. And adoption tailwinds remain strong, and institutional participation continues to grow day by day. Yet the market still prices Coinbase primarily as a volatile trading stock. I believe it is evolving into a foundational digital financial infrastructure, and the current valuation does not reflect that transformation. For those reasons, I recommend to buy with a $339 price target.